Hello traders, you're welcome to this video and I welcome you back to the Forex Geek channel. If you are looking to improve your trading with one of the most straightforward strategies, then you are in the right place, okay? In this video, we are going to be diving deep into the simple moving average strategy or SMA strategy and how you can use it to make more informed decisions in the Forex market. Whether you are a complete beginner or just looking to enhance your current trading routine, the SMA strategy could be the game changer you've been looking for. Before we get started, make sure to hit that like button and subscribe if you haven't already. You don't want to miss out on more trading strategies and tips that can help elevate your Forex trading journey. Now let us jump right in. Let's begin by breaking down what a simple moving average actually is. I'm going to add an SMA to the chart as I explain. All right, so this is an SMA. It is calculated by taking the average price of an asset over a set period, okay, such as 10, 50, or 200. In this case, this is the 50 period SMA, okay? So if you are using the 50 period SMA, it calculates the average closing price of an asset over the last 50 candles, okay? For example, if you are on the daily chart, it means the last 50 days. If you're on the 1 hour chart, it means the last 50 hours. All right. So traders use the SMA to spot trends, whether the market's in an uptrend, downtrend, or consolidation phase. The key is that SMA reacts to price movements and when combined with other strategies can provide clear entry and exit signals. Now that we know what the SMA is, let's talk about how to actually use it in the trading strategy. The SMA strategy typically involves two moving averages, a short-term SMA and a long-term SMA. Now, the most common combination is using a 50 SMA and a 200 SMA. All right. So I'm going to add a 200 SMA to the chart. Okay. So basically, the signals come when you have a crossover. When the 50 SMA crosses above the 200 SMA, you have a buy signal. And when the 50 SMA crosses below the 200 SMA, you have a sell signal. It's as easy as that. One of the main advantages of the SMA strategy is its ability to identify trends early. Now, when using the simple moving average, the main goal is to figure out whether the market is trending up or down. In this case, we can see that the market is clearly trending down. And you can see that the SMA has already confirmed that. It has confirmed that this is a sell trend. Okay, in a sideways or consolidating market, the SMA can help show you when the price is about to break out of the range. Okay, for example, if we have a ranging market, you can see like this period where we had a ranging market, the SMA is going to help you identify when there's potential breakout. You can see that at this point, the SMA crossover indicated that a bullish breakout was happening. And you can see that eventually the price went up. We had a bullish breakout. Okay. So now let's talk about how to use the SMA crossover signals for your entries and exits. This is the heart of the simple moving average strategy, right? Very simple, very easy, right? For a buy signal, when the short-term SMA crosses above the long-term SMA, whereas when the 50 SMA in this example crosses above the 200 SMA, it signals a potential buy opportunity. So this indicates that the market is shifting to a bullish trend and you might want to enter a long position. The idea here is that you are entering the market at the beginning of a new uptrend. Then for a sell signal comes when the short-term SMA crosses below the long-term SMA. It signals a potential sell opportunity. This suggests that the market is entering a downtrend and you might want to go short or exit any long positions. All right. Now, it's important to wait for the crossover to be confirmed, meaning that the price should stay above or below the moving averages for a period of time before you take action. All right. This reduces the risk of false signals and improves the reliability of the crossover. For your exit strategy, you can set your take profit. For example, if you're in a sell trade, you can set your take profit at support zones, support levels. Right, you can actually decide to use some support levels to exit your sell. Or if you're in a buy trade, you can decide to use resistance levels to exit your buy. All right. Now, the simple moving average strategy works because it helps traders filter out market noise and focus on the underlying trend. Trends are one of the most reliable aspects of the market, and the SMA helps you identify when the market is trending so you can align your trades accordingly. The SMA is also easy to understand, which makes it accessible for traders of all experience levels. There's no complex analysis or complex calculations involved, just a simple moving average that you can apply to any chart. Moreover, this strategy works on all time frames, whether you are trading the daily chart, the 4-hour chart, or the 1-hour chart. It's versatile and can be adapted to different trading styles, whether you are a swing trader, day trader, or even a position trader. Okay? Now, while the simple moving average strategy is effective on its own, it's always a good idea to combine it with other technical indicators to increase your accuracy. So here are some popular indicators that work well with the SMA. One is the relative strength index. The RSI can help confirm whether the market is overbought or oversold. Okay, if you see a bullish crossover but the RSI is overbought, you might want to wait for a pullback before entering the market. Okay, now another indicator that can be used is the MACD, the moving average convergence divergence. It's another great indicator to use with SMA because it also focuses on moving averages and crossovers. Okay, when both the SMA and MACD show a similar trend, it strengthens the trade signal. All right, for example, here you can see a sell trend, a sell trend. Okay, now finally, support and resistance levels. I always like to emphasize on those, right? Very, very important. They're very important on your chart. Combine the SMA with support and resistance levels because it can help you identify strong entry and exit points. If the price is approaching a key level and the SMA, the SMA can actually help you confirm whether the market is likely to reverse or break through. For example, here, the price was already at the resistance zone and there was a rejection, and the SMA here confirmed the sell. Can you see? SMA confirmed the sell, right? So wrapping things up, the simple moving average strategy is an effective and easy to use approach that helps you follow the market trend with minimal complexity. By using the SMA crossover as your guide, you can enter and exit trades at the right moments and avoid choppy market conditions. Remember, the key to success with this strategy is patience and discipline. Don't rush into trades. Let the crossovers and the market trends give you a guide for your decisions. Okay? If you found this video helpful, be sure to hit the like button and subscribe to the channel for more tips and strategies to improve your Forex trading. Leave your thoughts or any questions in the comments section below, and I'll see you in the next video.